This is a Chainlink technical analysis video. We're going to look at Chainlink versus the dollar, Chainlink versus Bitcoin, and we're asking a couple of questions. Is this just a healthy pullback as part of an overall upward trend? Where would we have to see things move past in order to start thinking that maybe, we're going towards the downside for a bigger move? But before we get into it, I just wanted to show you this picture here. Ta-da! That's an NFT. That's an NFT that I made on a website which is actually run by one of the people out there who's part of the Rocky Outcrop community, and I just think that it's great. And if you want to check out how you can get your hands on that NFT yourself, then watch the Ethereum video, and that's where we make it together on the video, so it's a bit of fun. Okay, so let's take a look at the charts. And we can start off here looking at the dollar pricing. I can just get rid of a couple more of these drawings on here. Bring it up full screen and say, this is the question, this is really what we're looking to. If I had to draw a line on the charts and say where I don't want to see the prices going down any further than, then I suppose I would probably look towards this yellow line here of the $7.35 down as far as $7.20 if you're looking for a range there on that one, to not go any further than as part of this pullback. If we look here as well with this, you can see the crosshair, the serrated line running along from where I'm hovering the mouse over there, that it lines up with the top. That is a Fibonacci retracement drawn in from a swing low in the past up to the highs here, and we want to see the prices remain above $7.11 so that they don't actually confirm the 236 and look for a valid retracement towards the downside. So if we did have to have sort of three targets, the three zones of of the purgatory or whatever, then they would have to be there at 735, that 720, 20, and 711, because 711, got to call it that. Also, that's where it is. So those are the three zones that I'd be looking at for in terms of whether or not this could turn around and go towards the top side. Now there is a caveat to be thrown out there, in the sense that we could actually see the prices turn around from where they are just now. And what makes me say that is not precisely necessarily where they are just now, but that we've actually come in here and touched the 236 Fibonacci retracement over on the Bitcoin pricing. So if we do the same thing here, like just in terms of the we'll just give it one zone on this one. We'll call it 83.99. So we'll call it 84K, right? 84K is the area to be aware of for the Bitcoin pairing. So, we've come down as far as that, and we've risen up since. Now, we still do have the prices coming down the way a wee bit, so we'll dive down and take a look at the lower time frames and see if they're coming in with any sorts of divergences or anything like that, so we can assess the movement, say the 4-hour time frame, for instance, or something like that, from the 16th of July down to where we are now, and see how that's kind of panning out for us. But that's what I would be looking to. If we did move down below that, then there's these sorts of three potential zones for the prices to turn around thereafter, and that would be 75k, 69k, you could call it 70k, you could call that 75k, call that 70k, and call that 60k. Just to make the pricing aspect of it fairly easy for us, because that would be the 382, the 50%, and then the golden pocket zone on the Fibonacci retracement, should you confirm it as a valid one moving past the 236. Now, there's various other ways we could be looking at this. I'm just trying to kind of make it fairly simple, and of course there's fairly obviously numerous different ways we could look at it. It's just that the Fibonacci does make the context and providing these numbers and areas to people, the sort of key areas, to be quite easy. And they do tie in with other things. Going down here to the 76,000 area, if we were to just wick down and move up, you could be looking at a close above the 77,500 area, and therefore just simply be putting in a higher low if you were looking at nothing other than simply, and not even, not get the Bollinger Bands off and everything else, if you're just simply looking at whether or not we're going to have higher highs and higher lows. Because currently at the minute we're sitting in a higher low, and you could maybe consider this little point here to be the previous low. Now, I don't really like doing it when it's like this, where you can see that we had this this doji candle here and whatever else, and it wasn't so much of a low really, because we didn't actually go lower than the wick on this one, and we didn't really set it in anything like that. But at the same time, you can you could consider that to be the case. And as well, though, we moved away from the Bollinger Bands recently in terms of the 24-hour time frame. Let's just put the Bollinger Bands into context by going up a ways, as you can see there on the due day, blah, blah, blah. But if we go up to the weekly time frame, you can see this comes down to 80,000 here. Going back down to the 2-day, where do we get our Fibonacci going to show up here on the daily? It's disappeared now. Just because I've hidden the drawings, right? Sorry. Will it show up on the weekly? Yeah, great. So you can see that if we did come down to this here, it'd still be a ways above where the 382 is, but you'd be moving past that. You'd be moving past that 84k area of the 236, and maybe you'd find yourself just being supported by the Bollinger Band itself, because on the weekly time frame, as you can see, we do like to come and visit this thing, as we do on all time frames. Really, it's a relative proposition, isn't it? And that's what I would look to first off, And if we do go down to this area over here, just to put it into context, some more context, in terms of the dollar prices, or the Bitcoin prices, then that would be, we've never really. We're still all in all-time high territory over there. In terms of the dollar pricing, coming down towards where the 618 would be at, you're looking at coming back into where we've had previous price action happening in the past. So, you could look towards different levels in there. For instance, the 50% one might be your strongest outlook in terms of if we were to move past the 236 over here, you could be looking towards $5.11, for instance, as where you'd be wanting to see the turning around at. Coming down to actually where the baseline is here on the weekly time frame would be quite dramatic, I think, in terms of the price action. That would give you your 618 over there. But if we go down again towards the lower time frames, and this is what we said we would do before, so I'll just get on with it. Get on with the show, Rocky. Now, just a reminder, we had a symmetrical triangle here, which we broke out of towards the downside, sure, and then we've come down, we've got the full measured move off the back of it, sure, okay. So that's kind of like, given a context from a sort of pattern trading point of view to the price action. Just going to put it in terms of a Fibonacci sort of point of view, just so we can get some sort of relative sort of sense of where we are here. Then is when the prices move up above $7.92, then you're looking at things being quite positive. It's where the 21 EMA is here in the 4-hour time frame in terms of this downward trend that we've had since, over here on the, if you want to call it that, on the 4-hour time frame since the 16th of July. And currently, we're just looking like if we close here, then we're putting in lower lows. So if I bring up the oscillators down below here, then how are they shaping up? Well, it's not actually got that bullish divergence quite yet. But if we see this close up, if this actually becomes a local low and it closes higher, so it closes at if it closes up towards that 790 area, it closes up at say 787, then maybe you'd be looking at it being hidden bullish divergence should the prices turn around. That's a bit much to say. So instead, overall, you'd have to kind of just wait and see if this pans out. And if we move on past that area, the lower end of the Bollinger Bands in the 4-hour time frame comes in there at the 55 EMA, currently at 766. So that's that one. Bitcoin price wise, same deal. It was the same thing set up with the. I should really lock these things because I'm always moving them and then undoing it. But for some reason, I don't like locking them. I don't know why. If we were to do the same sort of thing over here, take a Fibonacci off the top of that and be annoyed because, yet again, it's covered up by some box. Excuse me as well if you hear ambulances and whatnot outside. It's just constant here. Go down to the lows using this wick here, going wick to wick in terms of that movement there, and just looking and saying then that in terms of the Bitcoin pairing, you've got that 86,700 area, moving up above that, 21 EMA, baseline of the Bollinger Bands, several things all happening at once, and you could easily look up towards where these other areas are. The 618 on this one coming in at 92k, that would be pushing on beyond the Bollinger Bands in terms of this time frame, the 4-hour one, so you could be looking towards that area and thinking, would you get a pullback at that point? If you want to spread out the Bollinger Bands and still be within them in terms of the 12-hour time frame, then you came up here to the 618, where would you be in terms of the context? Well, you'd only really be as high as this inflection zone here if we just hide all the drawings. You'd only really be as high as this. You'd really want to push on past that to the 92, 93k area, and in which sense you'd be looking at the sort of 786 and the 886 Fibonacci retracement points then at that point, and hopefully managing to go up there. As you can see, the Bollinger Band's just kind of curving towards the downside slightly as it's tightening here slightly, which is maybe a little bit of a precursor in terms of this losing losing some of its luster, the 20 simple moving average over there. But generally speaking, you know, there's this, we've been in an upward trend. The upward trend in terms of the lower time frames, things underneath the 24-hour time frame, as we've been speaking about recently, have got this bearish divergence on the go. If you look here, if you look, let's just look at the RSI for this one just now. Just look, there's a bit of bearish divergence there, 4-hour time frame. Fit the old bearish divergence and that climb up with these lower areas there, 3-hour time frame, likewise, you know, 1-hour time frame, yada yada yada. But then going down to the 1-hour time frame, then have we got lows coming in here that are potentially going to work out as being divergent? Well, we are lower. And over here, we're not necessarily lower than just this point here on the 18th of July. So these lows that came in on the 18th of July with this movement down, which is what we based the Fibonacci retracement off using the wick here on the 18th of July at midnight, then you can see that we're slightly bearishly divergent in terms of that. How does that pan out on the 4-hour time frame though instead? Not quite there on that one. So we just have to hope that this would fruition, turn into some sort of, you know, you'd get some sort of movement out of it. If this traces towards the downside, then we could be seeing ourselves visiting that area that we spoke of already at the start of the show, where we have the 236. Did we speak about that there? 8398? Yeah, we did. I wrote it in. I drew a picture and everything. I've got a thing there and everything. 84k. Yeah, so then we can make an assessment of that overall. So long as we're above it, as you can see, we're kind of pretty darn close to it at the minute, at the time of filming. 85k there at the minute on that one. That's what I'm looking to, you know, that's what I'm looking to. Suppose you could have movements beyond that area for sure, you know, and then coming back up again. I wouldn't necessarily put it right to the penny, you know, that's like 84k, I wouldn't say right on the penny or whatever. But that's the area that I want to see things turn around at, or else, you know, I may be looking at one of these three movements towards the downside overall, you know. The thing is that the trend is your friend till the end of the trend, and that's what we're really discussing here using more words. If you see this is an upward trend, at what point would we say that the trend is ending? And it depends on the certain time frames that you're looking at, you know, and where we could be going past. You know, I wouldn't get too anxious about the trend overall actually until actually the prices had broken down below that 58,000 level. Well, this here is the low to be of concern. Let's call it 62,000 instead. You know, in terms of the Bitcoin pairing, where this 618 is. No, let's not. Let's call it where the golden pocket is, 61,000. That's what I'd be kind of looking at. You know, with these three things towards the downside, because all three of these could come in as a terms of, you know, a retracement to, while we could still be continuing the upward trend overall. It's likewise with the dollar pricing. You know, while all of that's true, wouldn't necessarily get too concerned until we were pushing down towards the lower end of this and coming back into our previous price action zones in that $5.80, you know, area there on that one necessarily. But there's other things to be aware of, you know, for instance, how are the stock markets doing, which is something that we spoke about before. Let's just, do we want to bring up just the CFD thing here's fine. Looking at this, you know, we've had this bearish divergence on the run up towards it and to the highs. Then we've come in here. Will this ultimately end up being a lower high, which sees the prices moving down? But ultimately, you know, we've had some good price action today, and seeing the prices remaining above really this sort of the wick over here on this one, I'd look towards 10,780. If it can actually close it above there, then maybe tomorrow we also get the sort of the, you know, more continuation towards the upside if there is follow through off the back of this. Cross here on the DMI down below, and us managing to sort of move towards the top side, you know, past the neutral line here on the stochastics, back into the bullish control zone on the RSI. That's just in terms of the 12-hour. Looking at the 2-day time frame, you know, you can see that we came up here and what is bearish divergence on the 24-hour time frame isn't, so we could be looking towards the top side. So I am bearing things in mind like this just so that I provide a bit of context for people outside of the actual coin itself, because I know we're in all-time highs territory and people are looking for additional ways of being able to make an assessment. Well, we can look at the sort of another risk-on asset, which is technology-based stocks, as the Nasdaq. It's pretty embarrassing that I've forgotten what the Nasdaq ticker is. NQ, that was it, NQ. There we go. Yeah, cool, right, sound, whatever. Everything I said about the CFD still applies over here on the other one, as you can see, without the bearish divergence. You know, maybe we've still got things on the go. This maybe was just a natural giving a chance to these things to reset slightly, you know, as we've come up here. So, wondering about that, let's just see how it all works out for us. And yeah, you know, because as long as we have overall bullishness in other markets, that's quite good. Let's suppose we could also put into a bit more context by checking in with our pals, the SPY. Yeah, so are we going to get a sort of double top in this area or not? You know, if it comes in here and goes up and pushes any higher, then you'd have a touch of the old bearish divergence on the go for sure. We'd really want to see this pushing up towards that 325, you know, 325s with a bit of, with these things moving up higher in order to avoid that. But like I say, just with the Nasdaq one, you know, that you could look towards whether or not pardon me, you could look towards whether or not, you know, we're actually able to come up towards these areas and close out for the day. Oh look, we're actually, yeah, so at the minute we'll be putting in some bearish divergence at the minute. Yeah, what about the Dow Jones? So no, so yeah, just looking across the things, I'd be looking towards that whether or not we put in bearish divergence or not, and whether how the overall markets are going in terms of the Nasdaq one, for instance. Then you're looking all right on that front, and we could see this easily turn around here at this point, just at the 84,000 towards moving towards the top side. We've come really in quite close actually during filming this episode towards where our sort of target would be at, pretty close, you know. So even if it turned around from this point here, that would be totally acceptable. I'd start to feel a lot better about things when they went above $8 or 87,000, and in terms of the dollar pairing, of course, above $8 itself. But you know, $8.10 would be good, and then of course, you know, looking towards the 870s and 880s again thereafter, if we can try and push on beyond that. But we've got, you know, it's been extended, and that's what you happen in times of blue sky type thinking stuff. You know, you're going to find that these oscillators and whatnot can kind of give you a little bit of alarm coming in there because of the lack of liquidity towards the top side, and of course things selling off. No point bringing the VPVR in or anything like this here because it's this is all time highs. Yeah, cool. Okay, maybe went a wee bit off topic there. I'm not too sure, but I'm sure I'll be fine. Thanks so much for tuning in. Really do appreciate it. If you want to hit that like button and that subscribe button, then you are special hero. Thanks so much for that, and I'll catch you in the next episode. I've been Rocky Outcrop. Thanks so much. See you next time.